Budget Opportunities 2023. What stocks to look out for? Budgets are one of the most important events that the stock markets look forward to for every year, as important policy announcements and reform initiatives are undertaken. Markets and stocks do react strongly to budget announcements. In fact, historical data shows on an average, markets move 2 to 3% on the day of the budgets, and individual stocks may show a variance of 5 to 15% depending on the news flow that impacts them. In this context, the 2023 budget assumes added significance as this budget is the last full budget before the general elections next year, and there are expectations that this budget could be a populist one. However, market players would hope for a progressive, non-populist, capers-focused and fiscally prudent budget. We firmly believe that while a single budget does not and will not have an impact on the long-term growth story of a sector or a stock, it surely acts as trigger for short-term volatility, which positional traders and investors would want to take advantage of. It must be noted here that a lot of stocks from infra and capital goods space have already rallied quite a bit in the anticipation of a good budget and may react adversely even if the budget favors them. In other sectors as well, many stocks have already rallied substantially, making them overstretched and overbought. Thus, one needs to be very picky on which stocks they select if they purely want to play it for the budget. In this video, we have not only outlined which sectors are likely to benefit, but have also focused on stocks within those sectors which are looking the best from a risk to reward perspective. Insurance. The insurance market in India is ranked 11th in the world for the insurance sector. Considering India is a much underpenetrated market as far as insurance is concerned, important reforms would be expected from the FM to give a major thrust to this sector. The tax deduction limit under Section 80D, which is Rs 75,000, and Section 80C, which is Rs 1,50,000, can lead to increase in insurance demand and improve penetration. The current 18% GST on insurance premiums makes the policy expensive and less accessible to common people. The government could reduce the GST to 5% or do away with it completely. Technically, on charts, we like MFSL from a reward to risk perspective, followed by ICICI Prudential and HDFC Life. All the insurance stocks were under pressure till recently and have now approached their key support levels, making them attractive fundamentally as well as technically. Housing finance. The government may give more incentives to boost affordable housing in the country's capital cities. There is also an expectation that the government would increase the Rs 2 lakh tax rebate on the housing loan interest rates under Section 24 of the Income Tax Act up to at least Rs 5 lakh. Technically, on charts, we like Canfin Homes and HDFC. Both the stocks are looking positive from a medium-term perspective, and any favorable news would act as a trigger, propelling them to higher levels. Pharmaceutical sector. Last but not the least. The Indian pharmaceutical sector is expecting an increase in the budget outlay and fund allocations. Last year, the healthcare sector got a 16% hike in the budget allocation due to the pandemic crisis, and it is further expected to increase in this budget. Pharma industry experts expect the FM to give major SOPs for research and development in the industry. Technically, on charts, we like Lupin from a reward to risk perspective. The stock has been beaten down in the recent past and now trading at key support levels with important reversal signals. Any positive announcement in the budget is likely to impact the stock favorably.